Hello everyone, it's Friday, April 25. Today we're taking a closer look at the euro and the British pound charts as we assess the potential market shifts. The euro remained range-bound but managed to edge higher against the dollar, buoyed by robust German data on business climate, current conditions and expectations for April. The numbers outperformed both analyst forecast and March readings, underscoring that Germany's economy is holding up well and suggesting the ECB's interest rate cuts are already supporting an improved business environment. Even Donald Trump's sweeping tariffs appear to be having only a limited impact on Germany for now. Meanwhile, investors digested U.S. initial jobless claims, which came in line with expectations, and albeit durable goods orders, though these reports failed to give the greenback any meaningful lift. That changed during the Asian session, when the dollar rallied against both the euro and the pound sterling, fueled by fresh remarks from President Trump. The U.S. leader resumed his criticism of Fed Chair Jerome Powell, accusing him of being slow to cut rates, though he also clarified he has no intention of removing Powell from the post. Despite the dollar's surge, overall market sentiment remains bullish. However, the euro is clearly coming under pressure, and today's economic releases could trigger a significant sell-off. Let's turn to today's macroeconomic calendar. This morning, attention is on UK retail sales, expected to fall by 0.3% in March. On an annual basis, sales are forecast to rise 1.8%, easing from February's 2.2% gain. Any downside surprise could put pressure on the British pound, potentially ending its current short-term uptrend. With no major releases from the Eurozone, the spotlight shifts to US data, particularly the University of Michigan survey readings. The Consumer Sentiment Index is projected at 50.8 for April, with inflation expectations seen holding steady for March. Given the light calendar, the market may remain range-bound, with risk buyers maintaining a slight upper hand. From a technical point of view, the 1-hour EUR USD chart suggests that the decline followed by a false breakout at 1.1315 support level would generate a buy signal, with the euro likely to rebound towards 1.1391. A breakout and consolidation above these marks would open the way to further gains towards 1.1435, with the most distant target set at 1487. And that level I would recommend going short on the rebound, anticipating intraday correction of 35.50 pips. Short positions at 14.35 and 13.91 should be considered only after a false breakout. In the bear case scenario, if the price breaks through 13.15 and holds below it, the euro-dollar pair could extend weakness to 12.67, potentially reaching 12.17. At this level, going long on the rebound would be a smart move, targeting 35.40 pip correction. Going long at 1.1267 and 13.15 would only be relevant following a false breakout. Speaking of the British pound, the overall trend remains bullish. It's clear that buyers need to defend the 1.3251 level. A pullback followed by a false breakout this mark would present a buyer opportunity, targeting an advance to 1.3310. A breakout and consolidation about that level would open the path to 33.65 and possibly 34.16. At this level, I would recommend going short on the rebound, aiming for an intraday correction of 35.40 pips. Short positions at 1.3365 and 33.10 would be prudent in the event of a false breakout. If UK retail sales data disappoints and the pair breaks below 32.51, this would pave the way for a deeper correction towards 32.05 and even 31.65. At this level, it would be wise to go long on rebound, targeting 35.40 pip move. Long positions at 32.05 and 32.51 should only be considered after a false breakout. Good luck to all and have a nice weekend.